All right, scholars, in this particular exercise, we'd like to make sure that you're familiar with what items are allowed to have an offset from a passive activity loss. So we're going to be taking a look at various items and seeing how they work. We have a passive activity is an activity in which the taxpayer does not materially participate. Examples of passive activities include rental, interest in limited partnerships, and possibly just a passive investor in an S corporation. If we make the assumption that for this particular exercise in the facts that this is somebody who does not materially participate in the real estate venture and they got a K1 with the passive activity loss, the question comes up, what can they use to offset it? So against which items would a passive loss be deductible? Against your wages? No, sorry, that doesn't apply. How about against your salary? Nope, once again, not going to work. So we'll put an X there. How about income from a limited partnership? Yeah, there you go, right? One passive activity against another passive activity is fine. How about a Schedule C income? Nope. Even though that's your job and your work, the bottom line is it ain't passive, and I'm using incorrect language. How about interest? Sorry, can't deduct that passive loss against your interest income. Dividend income? Nope, not allowed to do that one either. How about capital gains? Once again, we're striking out in this case. How about income from an annuity? Once again, no, passive activity losses are not allowed to offset that. How about rental income? Yes, in that case, we are allowed. So there are two of the items, income from a limited partnership, and of course, if you have another piece of rental property that had income, then this rental loss can offset the rental income. There's the only way to do it. Now, what happens if you had a net loss and it wasn't allowable against any of these for whatever the reason? Carry it forward, and it can be carried forward indefinitely to offset future rental income, and or when you sell the property in the year of disposal, you can always take that loss as a subtract from your proceeds / net gain. Let's take a look at the following and see if these statements are true regarding passive activities. Which statements are true about passive activity losses? First one, passive activity losses are not deductible in the current year and can be carried forward only 5 and carried back. Wrong, not allowed. So that's wrong. The next one, passive activity losses that are not deductible in the current year may be used to offset passive income in the future. Yep, you can carry them forward for an unlimited amount of time. A suspended activity loss, in other words, it wasn't allowed this year, we're carrying it forward, becomes fully taxable. In other words, you can deduct it in the year the property is sold or just scrapped. Yes, as we said, that's absolutely allowed. How about if a taxpayer becomes a material participant in a passive activity? The unused passive activity losses from past years are not deductible. That's what makes that one wrong. They are deductible. So that's incorrect there. How about an individual may deduct up to $25,000 of net passive losses attributable to real estate if actively engaged in the rental property and owns at least 15%. There's the problem. Only has to be 10. So the 15 is incorrect. And of course, there's also another criteria here, and that other criteria is you also have to have your income, your AGI, below a threshold level. So that one, sorry, not allowed. And then finally, a real estate professional that performs more than 50% of personal service in the year, and that amount of service is 750 hours or more, that person can deduct their real estate losses against other income. Yep. Just like the mom and pop exception, real estate pros are always allowed to subtract their losses against other sources of income because that's their stock and trade. Well, ladies and gentlemen, hopefully you crushed those questions, and we'll see you in our next module.